Markets are shaking again. The S&P 500 just dropped by over 2.5% in a week. Retail traders are being forced out and headlines are buzzing about Elon Musk's record-breaking $1 trillion package. In today's video, I will break down what's really happening in the US market this week. My personal trading portfolio is still up 78% year to date, even after a red week, and the trades that I made and what I'm watching next, and why Elon Musk's new deal is shaking Tesla investors. By the end, you will have a clear sense of how I am positioning into next week's CPI data and how you can apply the same discipline in your own trading journey. So, welcome back to Streetwise Economics. I'm Isaac Jonas, an economist and a retail trader documenting the real side of trading and investing, from wins to losses and the lessons that I am learning along the way. So, if you enjoy this honest market breakdown and want to learn how to trade smarter across the US and Canadian markets, make sure you subscribe and turn on the notification bell. And if you want to go deeper and get coaching, visit www.streetwiseeconomics.com. I would love to help you build your financial game plan. This video is for educational purposes only. It is not financial advice. I'm simply sharing my experience, trades, and research. So always do your own due diligence before investing. Where do things stand right now? At the time of recording, my public trading portfolio sits at around over 38,351 Canadian dollars, still up a solid plus 78% year to date, even after this week's pullback. My portfolio took a dip this week, about minus 1.28% today alone, and the open profit and loss is around minus 2,100 Canadian. But overall, it's been a strong year. I will show you the real numbers because trading and investing is not going to happen in a straight line. It's about managing risk and learning through each phase. So let's talk about the trades for this week and the lessons. For me, this week was not perfect. ACHR and Grab both moved against me. They are long dated options expiring in January 2028. So I'm still holding them steady. I still believe in their long term stories in terms of the business. But my timing in this market, I have noticed that it is very tricky and it can test your patience. I also am keeping an eye on HIMS, which is a stock that I'm watching. I like their recent earning results and how they are positioning their business in the US and internationally, especially their telehealth business. My cash secured put, I took another one yesterday and I cashed out some money, which is good. I preserved my capital today. I did another cash secured put. I took the strike price of $38 and I got some cash upfront, $2 kissed per contract. The good thing is, if it drops below $30, I will still get to keep, even if it still doesn't drop below $38. So that's the good thing about cash secured puts, especially in this case. Despite their good earnings, they dropped because sometimes investors tend to overreact if they notice something or they are just fears or any other catalyst that might act to trigger the sell-off. So I like to do cash secured puts because of that reason. I get cash up front, being paid to potentially buy the stocks that I otherwise want to hold. So that's one of the names that I am quietly becoming very interested in following. And a quick one on DoorDash, I did a cash secured put yesterday and I closed the position with $90 profit. I had taken a strike price of $190 when the price had dropped to around I think just above $203. It is a nice small win, but this reminds me that steady premium income matters, whether it's $90. If you make $90 a day, for me, it's something that I actually like with very limited risk. I exited the position because I don't want to tie up a lot of capital, because for a strike price of $190 for DoorDash, that means I would have 19,000 US dollars tied down to that. And The idea is that the volatility in the US equities market has been very much. You see, most names like Meta, Microsoft, most of the tech names, they have been on the red. So, what does it tell me? For me, it means there are people who are selling, right? More people who are selling than people who are buying. Hence, the price has been dropping. So, the biggest lesson is that I should stick to my own trading rules. I went against my rule of not trading before very close to earnings, and the volatility reminded me that why those rules should be followed. So the stocks that I'm watching are that include Nvidia, Meta, SoFi showing a consolidation after earnings. It could rebound if inflation surprises positively, in my view. But I'm also watching Palantir. It was really like up there, like almost $205. But now I was checking it, it was trading around 177 when I last checked per share. So that means I still like it long term, the AI story, and any dip below 170, I'm going to be particularly interested to potentially deploy leaps. And remember, patience pays more than prediction. Let's talk about Elon Musk's $1 trillion compensation plan. Now, the big headline of the week for me was that Elon Musk just got approval for a $1 trillion performance based compensation page. Notice that I said performance based compensation package, with about 75% of Tesla's shareholders voting in favor. The market initially sold off, perhaps because of some dilution fears, because such a huge package could increase share supply, which might result in the price of that particular stock dropping. But remember, this isn't free money. Musk will only get paid if Tesla keeps meeting major performance milestones, including things like meeting the targets for the volume for the car sales, which in my view, I think is quite difficult to accomplish. But Elon, being Elon, he might pull that out of the head like he has done. This also explains his earlier comment, in my view, about fearing to be potentially kicked out of the business. So he wants to still maintain control, just like Steve Jobs was once kicked out of Apple. So that's his idea. The plan is that this might still keep him motivated and yet still in control and revolutionize the business at Tesla. So with long-term investors, it means 75% of them, they are happy if they voted for him to get the performance-based compensation. Let's talk about the broader market. Across the US, stocks have been weak. The S&P 500, like I indicated, is dropped by 2.5% over the past 5 days, closing at near 6,700. Bond yields are holding high. The 10-year and the 30-year, they are still have been yippy. It means that the market still expects tight financial conditions. We are seeing a shakeout phase. In my view, margin traders getting flushed, weak hands exiting, and smart money slowly accumulating quality names. About the macro outlook for next week is a big one. I think the most important thing is to just have a bigger picture, but I'm interested that Thursday, November 13, core CPI data is going to be released. 0.2% is expected, and headline CPI 0.3% is expected. Jobless claims and oil inventories also will come out the same morning. This data will heavily influence the December Fed decision, whether we finally see a rate cut or not. If inflation shows more cooling, we could see a short-term market bounce. If not, expect more choppiness. Either way, I'm keeping cash ready for opportunities. My approach remains simple. I keep researching strong companies, trade only setups that are defined with the risk reward ratio, and use volatility to my advantage. As an options trader, volatility means that the premium might be actually higher because of the higher implied volatility, especially my case secured puts and leaps on quality names after earnings sell off. If you found value in this breakdown, subscribe, like, and comment below. Let me know if you have any questions or aspects about trading and investing in the US and Canadian markets that you'd want me to talk about in the next video. And if you'd like to do one-on-one coaching or join me at our investor community, join via www.streetwiseeconomics.com. Stay informed, stay disciplined, and stay streetwise. Take care and bye bye for now.